Hi, and welcome to Smart Beach Investors weekly real estate update for Florida's Emerald Coast. This is where we take a look at the vital market statistics, looking for trends and anything that will tell us where prices are headed in the short term and even the long term. Then we offer a little bit of analysis that will help you determine whether you should buy, sell, or hold your property. All right? That's what we do. I'm John Moran. I am the CEO and founder of Keller Williams Realty's At the Beach team and Smart Beach Investor. And that's what we're going to do here. So let's go ahead and get started.
Okay, let's talk about money, what we're watching here as 2023 comes to an end. And there's really three issues that come into play. Mortgage rates, they're a thing, right? Cost of real estate, yeah, that's a thing too. We're watching very closely. And then the third one, a lot of people forget, are T-bills. Where else can you put your money if you don't put it in real estate? And right now, T-bills are paying out pretty good. So let's take a look at how these three aspects of money play into what's going on here on Florida's Emerald Coast. Okay, so let's talk about mortgages first. Let's talk about how buyers buy, what the mentality is, generally speaking. Okay, so I think it's fair to say buyers focus a lot on their monthly payment. Okay, how much can I afford every month? I don't really care what all the other costs are as long as I can make it work on a month to month. How much the price is, as long as I can afford it month to month, I don't care. How much it costs me over time, I really don't care as long as I can pay it month to month. Okay, that's just the way it is. And when mortgage rates go up, buyers' ability to handle the monthly payment comes down. The way it is, right? Higher the mortgage rate, the higher the cost each month, the less likely buyers are to buy. And if you take a look, here's the mortgage rates. Take a look. Mortgage rates have been going up now for quite some time. Matter of fact, if you look at mortgage rates this year, even though they've come down a little bit, where are they at? 7.22, I think it was today. If you go back to December of 2021, they were 3.1. That's less than half of what it is today. That is why you're seeing so few transactions. Buyers are sitting out until the prices of mortgages come back down so they can afford the monthly mortgage payment, or they're waiting for prices to come down so they can afford the monthly mortgage payment. And right now, these mortgage rates don't look like they're going to come down to 3% anytime soon. That's going to be a problem for most buyers as we go forward. Okay? That's something to think about. Let's take a look at prices of real estate. What's going on with those? If mortgage rates aren't going to come down, at least very much, then the price of real estate itself has to come down in order for buyers to be able to afford the monthly payment, to make these things work and jump in and start buying up these properties. Okay, so take a look. Here's what we're seeing with the prices. If you look at 21 versus 23, 2021 versus 2023, we'll start with Destin. Destin homes up 16.1%. It's pretty up. It's pretty up over a couple of years. Condos, they went from 415,000 to 570. It's up 37.3%. Prices are still quite high. 30A, same story. 1,226,000 up to 1,615,000. That's a 28.2% jump in just 2 years. Condos, 701,000 to 985. That's a 40.5% jump. Prices are still high. Panama City Beach, houses, 395, jump to 520. That's a 31.6% pop in 2 years. Condos, 341.5 to 435. That's a 27.4% pop. Again, prices of real estate are quite high. Too high for buyers to make these numbers work on a monthly basis. They either got to have the mortgage rates come down or the prices of real estate come down. Neither of those look too exciting right now, so that's why we're seeing so few transactions in our real estate market. Pretty straightforward, pretty straightforward. Now, a third issue that comes into play are T-bills. This is the alternative place to park some money if you're an investor. Let's take a look at T-bills. An investor is looking for return on investment, ROI. Pretty easy, right? They take a look at what they can get for their money if they put it into real estate versus somewhere else. And when rates are low, costs are low, rents are high, all that stuff, investors pour into the real estate world because they can get great returns, great ROI on real estate. But when prices of property go up, mortgage rates go up, cost to own go up, and rents start to soften, that makes it very hard to get ROI on real estate. So then investors start to look around. Where else can I get money for my money? All right. And what they're seeing is in the US Treasury. All right. T-bills. All right. T-bills are paying out 5.25% right now. That's really good. And they're liquid. You can get them back within 6 months. You can get them back. That's good. That's quick turnaround. They're easy to buy. All right. They're safe. They're the US government backed. That's all good. Whereas real estate is very not liquid right now. Things are taking a long time to move. There's a lot of risk of prices going down, of costs going up, of a lot of stuff. So yeah, investors are out. They are choosing to park their money in T-bills. Take a look. Here's the T-bills. They are paying out way high now. If you look there at 5.25 back, I don't know, not too long ago, they were less than 0.5%? Yeah. So T-bills are very attractive for builders who can park money as opposed to having to take on the cost, supply chain, labor costs and everything and not have any buyers out there. No, I'll just park my money here and see what happens. And that's what they're doing. That's why the investor market has just dried up. And our inventory or in our number of transactions has dried up. Okay? So what has to happen is that needs to change. All right? We need to get the government back down to 0.5% or so, get real estate up in terms of appreciation, cost to buy it, cost to own and operate it, all that has to come down to get everybody back in the game. Is that going to happen here right off in 2024? I don't think so. But maybe. Probably not, though. Okay, so what else are we watching? You know what? The other thing that comes into play here is supply. Let's talk about supply. What's going on with supply? So we talked about the money, right? We talked about mortgages and how high they are. We talked about the price of real estate, and that's high still. Yeah, that's true. We talked about T-bills and how much they're paying out, keeping the investor market on ice. Now, the thing that can really change everything, the elephant in the room, is supply. And supply's been very tight. It's been very tight. But it's starting to loosen, people. Supply is starting to loosen. And as I look at things here, I've got the report. Let me put my glasses on so I can read this report for you, okay? All right. Sucks getting old, doesn't it? Any rate, okay, let's look at the supply of real estate for sale. We'll start with Destin Homes, okay? There's been an increase in inventory 3 of the last 4 months. 3 of the last 4 months, inventory has gone up. 2 of those months have been double-digit increases in inventory, okay? When supply goes up, that puts a lot of pressure on prices. And generally speaking, prices will come down. So we know that Destin Homes, we're starting to see an increase in supply. How about Destin area condos? This includes Fort Walton Beach, Miramar Beach, okay? Increase in inventory 2 of the last 3 months. October saw inventory condos jump 38.1%. That's a big jump in the number of properties listed for sale in October. So 2 of the last 3 months, we've seen condo inventory climb in the Destin Fort Walton market. 38 houses for sale. The number of homes listed for sale increased 7 of the first 11 months of this year. Okay. We're seeing the number of homes on 38 start to climb. Not every month, certainly, and not by a ton each month, but they are starting to climb. And that's an indication that prices are probably going to start coming down. 38 condos. Inventory increased 3 of the last 4 months. Okay. November jumped 44%. Okay. And the number of condos is going up. November last month, we saw a big jump, 44% year over year. That's going to put a big amount of pressure on prices. Panama City Beach, houses for sale. Increase in inventory each of the last 3 months, excuse me. Panama City Beach, houses for sale, increase in inventory 3 months in a row here. In November, it was up 19.5%. There are more homes coming on the market now compared to last year, same time in Panama City Beach. Condos, inventory each of the last 4 months, up. Okay, up. November, condos in Panama City, number of condos year over year, up 65.4%. That's a big number, okay? So when you look at things, prices are high, okay? Mortgage rates are high. That's an issue for buyers, right? Because they're trying to make that monthly mortgage payment work. Something's got to give. And it's really hard for prices to come down if there isn't any supply, right? Simple supply and demand. And now we're starting to see a crack in that supply. Up until probably the last quarter, we've seen the supply of homes and condos across Emerald Coast not really adjust down. Matter of fact, it even increased a little bit in some cases. But now we're starting to see the cracks. We're starting to see folks put their properties on the market. Inventory's starting to go up. Now, I think list prices haven't felt any change and sales prices haven't seen any change. But the number of properties coming on the market will probably cause both list and sale prices to come down. That's the way it is. As more properties come on the market, there's going to be a massive pressure to bring prices down. It's the way it always is. Econ 101, right? So we're going to continue to watch that. One thing I want to do, though, is point out the long game to you. Take a look at this. Let's go to the drawing board. Take a look at this. Let's talk about what the market looks like over time. I mean, right? So here it is. Time here, money here. Now, when you buy assets, equities, they generally go up and to the right because of inflation and appreciation. We know that. You buy here and over time they go up and to the right. Longer you own them, the higher up they go. Easy, we get that. But in the real world, the market looks like this. It doesn't go in that straight line. It'll go up and then it'll correct. And then if it goes back up and it's a V-shaped correction, great. And then it's going to come down and sometimes there's a U-shaped correction, right? And then it comes up. Now, I don't know. I think where we are right now in December of 23 is somewhere right around here. I think the market's going to bottom in 24, sometime in 24. Now, whether it does this V jump back up quickly or whether it becomes a U shape and then up, I don't know. We'll have to wait and see what happens. But I think we're right here. Expect a bottom somewhere in 24, and then in 25, it'll have some change. It'll either stop going down and start going up or whatever, in a V or a U. But here's the key I want to take away from this. Over time, long time, you win because prices will go up over time. If you're playing a short game, here to here, a lot of things can happen. Here to here, a lot of weirdness can happen. All these little short intervals are really hard to predict. But I can give you with great confidence between here and here, it's going to go up and to the right. But I can also with equal confidence tell you there's going to be a bunch of ups and downs in the middle. It's the way it is, all right? And that's what this is. So if you're in it for the long haul, you're fine. If you're in it for these short little runs, run and get out, because we don't know what's going to happen in the short term. We feel really good about the long term, though. Okay, let's get back to it. What does it all mean? Where do you go from here? What do you do? Great questions, right? Here's what I'm seeing. The real estate market's going to remain tight in 2024. It's going to be tight, right? We got to let prices soften a little bit. We got to let mortgage rates figure themselves out. We got to let sellers feel some pressure to lower the price. But with the increase in the inventory and a lot of pressure on the Fed, I would look for it to just be tight in 2024, at least the first quarter, probably through halftime. And as the market starts to correct, I think liquidity is going to become an important thing. All right. Folks that maybe have a ton of equity in their properties, that maybe bought a little high and needing that high rental income to make the thing work, and they're not getting that high rental income anymore and their cost to own has gone up, they might come into a liquidity crisis issue. Maybe their checkbook gets a little too thin. Maybe they lose their job. Maybe they don't get some bonuses they hoped. Maybe a lot of things come into play. And while that property has equity because it went up so much, they might not have the checkbook to carry it, and therefore they're going to have to sell into a declining market, which is a tough game to play. It's never fun, right? So I think we might start to see some of that as the year rolls on, and inventory starts to creep up and puts more and more pressure on sellers. So I think look at that. If you don't have that checkbook, if you're not feeling secure in your liquidity, your ability to carry this fallback, that every market goes up and comes down as we showed. If you don't have the intestinal fortitude, the want to even, or the checkbook, I would look at getting out now, right? It's like a weather forecast. I always tell people it's like a weather forecast. If you look outside right now and you see that it's a little overcast and maybe even starting to drizzle a little bit, get ready for rain. Bring an umbrella, right? But if you're watching the news and somebody comes on and says, yeah, next week it's going to be partly sunny, partly wet, you might want to grab an umbrella. Yeah, sure. Grab an umbrella because you never know. But right now we know because I can look outside and tell you if it's raining or not. An hour from now, 2 days from now, 2 months from now, very difficult. It's the same thing with real estate. If you don't think you're going to be in it for the long haul, go now. We know exactly what we got now. I can look out the window and tell you, price of your place is this. Okay, you can expect it to sell in this amount of time and get this return. Okay, outside of that, the longer out you go, the harder that's going to get. So as always, if you're in for this long haul, 10 years, 20 years, certainly longer than 5, then you're fine. Markets dip, they go up, they go down. You're fine. Ride it out. Ride it out. But if you don't have the checkbook, if you don't want to, run. Now's your time. Now's your time to get out when we know the market's still pretty high. You don't have to deal with any fallbacks, okay? Give us a email, info@SmartBeachInvestor. We can tell you what you got, and then you can make a good informed decision. It's what we do. We help people max out their positions as buyers, sellers, and owners, all right? If you're going to keep it, get that rent up. Get that rent up. Max out your income. We like doing that too. We can help you there, right? Send us an email, info@SmartBeachInvestor. It's what we do. We get you high rent. We can tell you where your property's at. If you decide to sell it, we can sell it and get you top dollars. If you decide to keep it, great. Let's get high rent. All right, that's what we got for this week. Check in next week. It's always going to change. See you then.